Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, July 17th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Here's a look at the daily time frame of the ES. Right now, trading just 11.25 points of range. Super narrow right now. That's 27% of average. It's been averaging about 40 points per day on a 5 and 10 day split. Overall, very narrow. Now, the previous week was a high range week. Big outside week up, failed at the previous week's low, squeezed through the previous week's high to close quite a bit higher, cycle high close. So this week could be relatively lower range compared to last week. It also could begin the week in a counter trend fashion. Early pullback this week could be an opportunity for bulls to buy the dip for another continuation higher until proven otherwise. The previous week's midpoint is going to be 44.85, so any pullback into that zone or just below it could be an opportunity for bulls to trap and reverse up ahead. If we take a look here at the ENQ, super narrow range as well. 67 points of range. Look at that tiny day right there, barely registering down here. 67 points is 33% of average right now, and overall this market also could see a narrow range, relatively speaking, compared to last week. Last week failed new low, outside week up, nice range here. We were looking to 500 to 600 points of range. We got more than that last week, so a great squeeze. We're now at a cycle high, so again a pullback could be seen here. If we go back to the previous week's midpoint, it's going to be 15,460. 15,460. So if we pull back toward 15,460, that could be an opportunity for bulls to defend and rotate back to the upside. This 15.4 is going to be an important level. You can see how prices compressed here for a few weeks and then broke through. So if we pull back toward 15.4 or thereabouts, bulls want to keep that bid for another stretch to the upside until proven otherwise. Right now, this market is too strong to fade. Even when price goes down one day or maybe a series of days, it's a very shallow pullback before a primary wave squeeze occurs. So again, you have to be very careful if you are going to fade it back to the previous week's midpoint. Know that any pullback, even if it's just a one day, could be an opportunity for bulls to defend and squeeze yet again. If we take a look here at crude oil. Crude oil right now down 1+%. This reaction here at the 200-day moving average, fierce rejection yet again. You'll notice the last time that price tested the 200-day, it looked very similar. Right here and right here, you're seeing very similar vibes where it hits the level and immediately pulls back. This one hits the level, immediately pulls back. It's the first sign of weakness we've seen in a while since this thing squeezed off the 67. So that was a pretty tremendous move. 10-point rally, almost straight up. No failed new lows, just higher highs and higher lows the whole way up until you hit the 200-day moving average. Now you're seeing a little bit of a pullback to retest the rising 8-period average here. You're retesting year-to-date VWAP. Can price hold the 75s and squeeze yet again and go rotate back toward the top of the range at 83.52? Or do we start to see a failure back below 75 that takes us again back toward the bottom of this range, 67, for another big test? So going to watch this area to see how it behaves here. 75 still a very important zone. If price can't get or stay above 75s, that could be quite bearish. Now, we do have quite the reaction that's happened in pre-market trading. This high right here, that's a serious strong high. 76.09, very significant high. Price rallied, shot up there, rejected, and turned back down. That was in the 4 a.m. hour here. And again, very sharp rejection that occurred there and then a turn down. So if that's a super strong high, then we could be looking at more weakness here to begin the week. That weakness could push us back towards 72s or perhaps even a bit lower. So keeping an eye on this to see how it plays out early this week. 76, a strong high. If we take a look at gold. Gold right now down 0.6%. Remember, the previous week here Where the prior week there we had this great reaction here. It was a pullback to the pivot range and a lower high developing, but it couldn't find a new low. And on failing to get a new low, that's when price pulled back and you saw the squeeze back through the 1940 level. That's a big squeeze there. And now we're coming back for a pullback here. Now, is this another rotation here kind of on a downtrending line and we work to lows, or does this squeeze that happened last week here get defended on a retest here? You know, can it find a higher low here and squeeze to 2000? That's our original idea. If price was going to squeeze back above 1940, then any pullback into that 1940 could be bought for a continuation to 2000. A failure at 1940 here, and you rotate to new lows, likely 1886 down below. So keeping an eye on 1940 here early this week. That could provide a tremendous opportunity for bulls looking to defend for the next squeeze. Now, this market has remained bearish overall, downtrending market. So if there's no rejection on this pullback, that could open up another round of weakness up ahead. That's going to be something to keep an eye on. Lastly, taking a look here at the YM. The YM here has traded within a very clear trading range over the last 5 weeks. One thing you may have noticed here in the weekly time frame is 1 week up, 1 week down, 1 week up, 1 week down, 1 week up. Is this a week where we're going to get a week down? And it's been a very clear trading range, great edges, 33.8 up to 34.8. Right now we're at the top of the range within a three-day narrow range, a 100-point range here for today, just 31% of average. Do we break down through that 34,450 level and open up another return down? That could be ahead. As a matter of fact, if you look here at the weekly time frame again, you can see the very nature of the up a week, down a week, up a week, down a week, up a week that we're seeing. Additionally, when you look at the midpoints of the last week here, and then here, and then there, and then here, they're all about the same. So again, do we open the week with a little bit of weakness here back toward the previous week's mids? If so, we could be looking at a 34,300 test up ahead. That's what this level is right there, 34,298. So 34,300 could be the target early this week just to get us back to that zone. And then do we drop below it and leave a mark here as a midpoint for the week? We'll see how that plays out, but that could be a magnet to begin the week, 34,300. So keeping an eye here on 34,450 for signs of failure. All right, that is it for now. We'll see how this develops here heading into the new week of trading. Good luck, trade well, and I'll see you in the trading room. Take care.